solidify. So then when we talk about the system, what you don't want to do is wind up on day 3 and day 4 fighting it. By that time you want to say, okay, that makes sense. And oh, Mac was talking about that. And oh, sure, when Cecil talks about some of the behavioral stuff that's pushing the market along, it'll start to make sense. So this foundation stuff is really important. Yes or yes? Yes. Yes. Okay. So we have our sell order here, our buy order here. Right? We're just trying to take advantage of the market whichever way it goes. And what I've tried to do in my daily videos is recap some of the action during the day. I actually have an application that isn't too buggy, and what I'm hoping to test out, well, let me just ask, would anybody be interested in hanging out in a trading room and watching the screen? I mean, does anybody do that? Sit around? Okay. All right, then we'll look into doing that. So I think I found an application that'll actually work and not get in the way of my trading. I just get nervous about that stuff. Yeah, it'd be a live shot. You'd be able to watch what I'm doing. Okay. You could meet my kids. So in the videos, what you'll see that I'll put a chart up, and what I'm trying to pinpoint are the areas where the market is most likely to make a move. And there are ways to look at the market and give you that indication, meaning as a discretionary trader, remember that's the guy that just likes to tinker and make the decision. You don't have a set of rules that are completely defined from A to Z. Right? If you're building a house, it helps to have a complete set of plans, right? And it probably would behoove you to go in a certain order, right? You'd want to pour the foundation first, not last. It gets in the wood and messes up the drywall, right? Okay, so what I'm trying to convey in my part of the presentation will be that stuff. What Cecil is going to be going over will complement this. He's the indicators that he's going to show you really take all this stuff and make it into squiggly lines. Okay? So the question is this a likely area for the market to move? Whether the market had done this before or it did this, doesn't matter. Going to drive the guys nuts with the back and forth. So as we go to the computer, okay, the two red lines, we've got what is that up there? A zone, resistance zone. All that means is we're looking for something to happen. Now we will overcomplicate this. All we're looking for is something to happen. All we're looking for is something to happen. We don't know what. Well, what you see Hercules doing down here is telling you that nobody's buying the euro. So that would be a good spot to put an order here, put an order there, and see what happens. And this is the level of uncertainty that we just have to live with, folks. I mean, at some point, you just have to put the order in and see what happens. It's not always going to work. As much as we would love it to, it just won't. So let me give you some perspective on that. How many of you are aware that there's a little bit of trouble in the credit markets? Right? A couple, 1 or 2 bad home loans out there. A few. Well, one of the largest trading companies in the world is Tudor Capital Management. How many of you know the name John Tudor? A few? Some of his funds went belly up, folks. I mean, this is a guy who has probably one of the most stellar trading records in the world. They just got it wrong. They made big bets and they closed the funds down. So it happens. The goal, now, fortunately with Tudor, they didn't make huge bets and get crazy like Amaranth did. Amaranth had one huge position that just got out of control. Tudor actually salvaged the fund with most of the investor money intact. They just took on so many losses, they said, you know what, there's not enough opportunity over there. So they closed it down. But there were significant losses. Some of the top trading firms in the world have had their worst year this year, in spite of some of the other gains. What that tells me is with commodities going like this and banks and housing going like this, that if it weren't for all of that other action, they'd probably be out of business. So those other market moves basically saved them from their other mistakes. So part of what you're going to learn here are techniques that you can go home with to help you not do that. And as you start to experience trading, as Mark has found out, it's not always easy to make the right decision. So that's why I called Hercules decision support. It'll put one more thing on your chart where you know, and we'll talk about it and we'll go over some of the things to look for as we go on. You'll know, okay, I really need to think about this position. I need to focus on what I'm doing here. I think half the battle is just knowing when to trade, right? Is this the right time or not the right time? Okay, Hercules will narrow that down. Let's take a look at some of the charts. If you look at page number 4, can we bring the lights back up? Yeah, they're working on it. Just so you guys know in the back, I don't need my computer right now. I'm actually pulling some stuff, some secret stuff down. No, I'm not trading. I wouldn't do that to you. Because if I was trading, what would wind up happening is I would be sitting here for about 15 minutes and suddenly realize there were, several other people in the room. I tend to get pretty focused. Okay, so on some of on page 3 and then on page 4. What are we looking at? What is this stuff? Well, what I wanted to show you were, and this is for those of you that are more statistically minded, these are some of the studies that they did in Japan. What they were looking at. What did price do? And what you're seeing are the bid and the ask, and then what happened. So some of you have heard me talk about sweet spots, right? Who's heard me talk about that? Okay, this isn't just idle stuff, folks. What the Japanese found out is what any trader would have told them is when there's wood to chop, you have to do it at the right time. Well, it seems like common sense, but, they're professors and you got to cut them some slack. They wanted to prove it. Well, what they found out, and if you want to search it on Google, it's called intraday seasonality. If you do a search on that, you'll find all sorts of scholarly works. It's amazing the level of study that they've done on this. And hope if you do that study, and I would highly suggest that you do, you'll get an inkling of how much time and money these people have. These are your opponents. I want you to think about this for a minute. Your opponents can hire 3 of the top minds in Japan to study their stuff. How many of us think we're smarter than 3 of the top PhDs in math in Japan? Anybody? 1, 2, 3. I caught you. 4. 4 people. That's just not likely, right? I mean, nothing on you guys, but you'd have to prove that to me, man. I mean, come on. These are smart guys because there are billions and billions of dollars on the line. And it was intraday seasonality. Intraday seasonality is the term. And so what they're studying was, are there times in the market where there's more liquidity? Are there more buyers and sellers? Like I said, to a trader, that's obvious. Yeah, it's at the open. You got about an hour and a half. Don't do it during lunch. That's not a good time. Because again, we have to remember the practicality of the markets. There are real guys executing real orders who really have to go to the bathroom. They really have to grab something to eat. and they have to sleep. So at certain times of the day, you're going to have